Hello everyone, I'm Marty Pospisil, and I have invited my good friend and longtime mortgage broker Paula Siemens to join me today. She's been in the business now for many, many years.
32, I think it is.
32 years. Yeah. 32 years. Oh, you beat me by 2 years.
Long time.
Long time.
Yeah.
There's no one I know that understands the mortgage business better than Paula. I have hundreds and hundreds, if not thousands of clients that's used you over the years. So I have great respect for your knowledge, and thank you for coming in today. And you are with?
Invis, the Siemens Group.
Thank you. And today we're going to talk about variable rate mortgages and trigger rates. Very interesting topic because we're seeing rates increase substantially as time goes on, and there's a lot of questions that we're getting, and I thought, hey, let's just do a short discussion on this so we can inform our clients with a link rather than answer the same question 100 times. Over and over. So, Paula, why is now different from, say, 2021 when most people went with a variable rate mortgage? Why are they suffering now? What's happening?
So the big thing is that anyone who's taken a variable since March 2020, they started off when the prime rate was 2.45. And most people had a rate discount somewhere around 1% or greater. So just in simple terms, people started off with a payment that was based on roughly 1.45, maybe down to 1.25%. So incredibly low.
Yeah.
Historically incredibly low. And so if you started with that payment, we've now had 3.5% increases to the Bank of Canada rate since March 2020.
Right.
And
incredibly quick.
Incredibly quick because they're trying to stave off inflation, and so they're trying to give it everything that they can to bring inflation down. And the payment hasn't changed for many clients. So if you're with a major bank, you will have a steady payment.
Right.
And that's supposed to be so people don't, they're not negatively impacted by rate increases, and it also accelerates the pay down when rates go down. So that's why variables have always been a good thing.
Right.
Because historically speaking, you've always kind of come out ahead.
Right.
This is a very unique time in the market that nobody saw. Nobody could see it. As far as high up in the banking system, nobody saw this happening.
Right.
And but here we are. And as of September 2022, many people have hit their trigger rate, which means that their payment no longer covers the interest expense.
Okay. Okay. So
there's no principal.
Right.
And they're not covering the interest. They're actually going into the negative, which is called negative amortization.
Okay. So they are no longer impacting their principal balance mortgage that they took out initially with the payments that they were making because the rates have gone up so high
that they're actually adding to their balance.
Okay, interesting. How would I know if my variable rate mortgage is close to or at my trigger rate? How do I figure that out?
So you can go into your web banking and look at your mortgage, and you'll be able to see what your amortization is.
Okay.
And that will be one indication. The other is that you can contact the lender that you're with and ask them how much of your payment is going towards principal, if any. As soon as typically speaking, your lender has already reached out to you if you're approaching this trigger rate.
Right.
So they will be giving you a phone call to discuss remedies to put your mortgage back on track.
Got it. Okay, it was interesting that you mentioned that because I was just reading an article the other day from the Globe that it said the bank will give you a courtesy call about your trigger rate, saying just to let you know you're now paying only interest and no principal, but when you actually pass the trigger rate, it turns from a courtesy call to a call saying we're changing your payment amount.
Yeah.
So they're obligated to let you know, but can you call them ahead of time and say, oh, okay, at what point, at what interest rate for the Bank of Canada prime overnight rate will I turn into a trigger?
Yeah, so you can contact them because the reason that it's not just simple is many people may have done accelerated payments, they may have made lump sums.
Fair
you
enough.
don't know what amortization they started off with.
Right.
Some lenders are going to allow you to go beyond your amortization that you even started with. So if you started with 15 years, they'll let you go up to 30 years, no problem.
Okay.
Many people are surpassing the 30-year by quite a bit. I think the longest effective amortization that I've recently encountered was, I think, 68 years or so.
Isn't there a cap of amortization?
There is in terms of a new mortgage, but this is what the effective amortization is based on this person not covering their interest expense, and now the interest is accruing.
Wow.
So their payment's doing absolutely nothing. So what you can do is reach out to your bank, look at your effective amortization, and then you can increase your payments. You can do a lump sum, but I fiddled around with the math, and I feel like you're better off doing an increase of payment than a lump sum, just simply because you do the lump sum and you're using quite a few dollars in that lump sum. I think you'd be better off keeping it aside to kind of help absorb increased payments rather than doing one lump sum. You'll have, I think, a bigger bang for your buck doing it that way.
So when you hit that trigger rate, your options are, like you say, the lump sum, but it doesn't really make the numbers don't work. You could do the lump sum,
right? Increase of payment. You could look at refinancing and stretching your amortization back out to a longer period of time.
Okay.
And you can obviously fix your rate. So you could go into a fixed rate. You have to go into a fixed rate for the time remaining in your contract.
Right.
So that's different for everybody.
Okay.
And right now, if you're able and if you do want to lock in, we're sort of suggesting 2 to maybe 3 years.
Okay.
Ideally not 5.
Right.
If you can avoid it.
Well, interesting info. I mean, I didn't know the banks had that option to increase your amortization. If I was in that situation and I was hitting my trigger rate and my variable, and they increased it up to 60 years, I turn 60 next year.
Yeah.
I'll have to edit that out. I will be 120 by the time I pay our mortgage off.
But at the same time, like if you had just taken your mortgage out in say 2020,
right,
you have 3 years left on your contract.
Fair enough.
So in that 3 years, hopefully inflation gets in check, and hopefully the Bank of Canada now has to start to cut. So at some point, you will start to go back down as the Bank of Canada starts to cut.
Right.
But sense. It's a matter of when does that happen and how much time do you still have left in your contract.
Well, and that's a whole other discussion, what's happening with interest rates, which we'll talk about in another episode. But I heard or read a stat, again in the Globe, where the Bank of Canada was saying 50% of the variable rate mortgage holders have actually reached their trigger rate. That sounds really high. And they're anticipating 65% to hit it by the middle of next year.
It does seem high to me, just simply because people who had their mortgage prior to March 2020, they were making payments at a higher rate. So depending on when you took your mortgage, and as I said, if you did biweekly payments or if you made lump sums, you're just getting into where your amortization is growing, but I don't know if your whole payment isn't going towards any interest. I think you might be paying still a tiny bit of interest.
Right.
Tiny bit of principal rather.
Right.
But maybe that is the case with the October increase that we just had.
Absolutely.
I'll have to relook at that.
Yeah. But and I think the main message here, if I'm hearing it correctly, is that as a variable rate mortgage holder, I should be on top of this. I should be in contact with my bank. I should prepare for next month, December 7th, I think is the next announcement. And I was just reading another article where Tiff Macklem from the Bank of Canada is saying, look, inflation is still high. We're probably going to have to raise the rates again. So on December 7th, we're going to see another jump, whatever that might be. Maybe it's 50 points, maybe it's less. Maybe
I think we're thinking 50 basis points at this point.
Significant,
Yeah.
right? That might push a whole chunk of other people in past their trigger rate. So
for sure.
Good to plan for that, because it happens. Do the banks adjust immediately, or is it the next mortgage payment?
No, they adjust immediately.
Immediately. So good to follow up on this. Really, really interesting time.
Oh, it's like historical. Of course.
Historic. Yeah, we're in historic times.
We are. I mean, never lived through a pandemic.
Yeah, well, exactly.
Never lived through this type of trigger rate. So.
No, there's a whole bunch of things happening, and not even to mention climate change. We're all experiencing that all over the world. We've got a major war going on. That's certainly impacting us here. Because,
for sure.
Right, the energy costs are hitting inflation, and everything's being impacted, and that's why we're one of the many reasons why we've got that high inflation, why our rates are so high. And another chat I'd love to have with you another time is what is the sort of forecast on rates, and we'll chat about that. But I think this is really good information. Thank you
well, you're
for
welcome.
this. Yeah,
thanks for having me.
Trigger rates, you guys. If you have a variable rate mortgage, get in touch with your lender. Find out what that rate is when you hit your trigger rate for your specific situation. Everybody's in a different situation, and good to plan for that and prepare for that. And Paula was kind enough to share what your options are. Chat about this with your lender, and it's just prudent to do that ahead of time.
Absolutely. Be
Great.
proactive.
Exactly. Thanks, guys.